I now hand the conference over to Mr. Anup Pujari from CDR India. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining us on Varun Beverages Q1 2021 earnings conference call. We have with us Mr. Ravi Jaipuria, Chairman of the company, Mr. Varun Jaipuria, Whole-time Director, Mr. Raj Gandhi, Group CFO and Whole-time Director, Mr. Kapil Agarwal, CEO and Whole-time Director, and Mr. Vikas Bhatia, CFO of the company. We'll initiate the call with opening remarks from the management, following which we'll have the forum open for a question and answer session. Before we begin, I would like to state that some statements made in today's call may be forward-looking in nature, and a detailed disclaimer in this regard is available in the results presentation shared with you earlier. I will now request Mr. Ravi Jaipuria to make his opening remarks.
Good afternoon, everyone, and thank you for joining us on our earnings conference call. I hope you and your families are all doing well and staying safe during this unprecedented time. I would like to begin the call by providing you an update on the current quarter, following which Mr. Gandhi will take you through the financial performance. We have started the year 2021 on a healthy note, delivering progressive performance across parameters in quarter one. The company registered a strong volume growth of 33% year-on-year. The macro environment in the quarter was largely supportive, as consumption was almost nearing a sense of normality. This resulted in a healthy volume growth of 34% year-on-year for our India business. The growth momentum continued in our international territories, registering a 26% year-on-year volume growth during the quarter. On the profitability front, we were able to sustain some of the cost optimization measures implemented during last year that enabled us to report steady EBITDA margins at 17% in quarter one, 2021. This in addition to a higher operational leverage and increased profitability from our international operations resulted in improved profits in quarter one, with PAT registering a growth of 128% year-on-year. Further, the repayment of debt as well as lower average cost of borrowing translated into reduction in finance costs during the quarter. From a demand standpoint, while we saw a noticeable recovery in the domestic markets in quarter one, the environment has evolved now with the onset of the second wave of COVID infections in the country. We are now witnessing more localized micro lockdowns and restrictions being imposed rather than a nationwide lockdown witnessed last year. This situation is being addressed by wider vaccination drives being carried out across the nation, which we expect will restore normalcy sooner than later. On the operational front, in compliance with government advisories, we have temporarily closed our offices and continue to implement work from home protocols for all the employees. Our manufacturing facilities continue to operate at established utilization levels, and we are undertaking all necessary measures to ensure and maintain the highest standards of hygiene and social distancing norms at our plants. While so far our operations are uninterrupted and are progressing as per plan, the complete impact of business due to these disruptions is yet to be ascertained. Notwithstanding short-term non-linearity in business, we remain confident of the medium to long-term outlook of the business. Keeping that in view, the Board of Directors has recommended a bonus issue of 1 equity share for every 2 shares held of rupees 10 each, including our belief in the continued growth trajectory for the company. I would also like to highlight that last year, even in the face of adversity, Our business model showed a strong sense of resilience, and we were able to deliver steady operational and financial performance. So we expect that once things stabilize during the current year, we should be able to swiftly bounce back. In conclusion, we are on a strong footing and will continue to diligently work towards strengthening our position as a key player in the beverage industry. I would now invite Mr. Gandhi to provide highlights of the operational and financial performance. Thank you very much.
Thank you, Mr. Chairman. Good afternoon and a warm welcome to everyone joining us today. I hope you and your families are doing well and staying safe during these unprecedented times. Let me provide an overview of the financial performance for the first quarter ended 31st March 2021. Revenue from operations adjusted for excise GST grew by 33.7% year-on-year in Q1 2021 to the level of 22,408.9 million rupees. Total sales volume grew by 32.8% to 151 million cases in Q1 2021 from 114 million cases in Q1 2020, primarily on account of supportive demand environment during the current quarter and lower base of Q1 2020 due to lockdown measures in the later part of March last year. Our organic volume growth was 24.7% in Q1 2020 over Q1 2019, leading to a two-year CAGR of 11.7%. CSD continued 70%, juice mix 7%, packaged drinking water mix 23% of total sales volume in Q1 2021. Realization per case improved marginally by 0.6% to a level of 148 rupees in Q1 2021, led by change in product mix with higher contribution from CSD and juice. Gross margin reduced by 294 basis points year-on-year to the level of 55.8%, primarily due to change in product mix and lower margins from our international operations due to water mix. There was a marginal saving in average sugar and fat prices in India during the quarter. EBITDA increased by 40.7% to 3,816.2 million in Q1 2021 from the level of 2,711.6 million in Q1 2020. EBITDA margin improved by 86 basis points to the level of 17% in Q1 calendar year 2021 as a result of sustained cost optimization measures that were implemented last year. Depreciation declined by 0.3% to a level of 1,347.2 million as compared to 1,351.2 million in Q1 2020. Finance cost reduced by 33.4% to 579.4 million due to repayment of debt as well as lower average cost of borrowing. PAT increased by 127.7% to the level of 1,367.6 million in Q1 2021 from 600.6 million in Q1 2020, driven by higher revenue, improvement in margins, and higher profitability from international operations. Overall, during the quarter, we have reported an encouraging performance. Our operational and financial profile remains solid and stable, and our focus remains on generating strong free cash flows over the coming years. On that note, I come to an end of the opening remarks and would like to now ask the moderator to open the forum for any questions or suggestions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vivek Maheshwari from Jefferies. Please go ahead.
Hi, good evening, everyone. A couple of questions. First, can you just talk about the scenario in April, although you did touch upon it, but April both in terms of, from a supply chain perspective as well as from a demand perspective, as things are on the ground right now?
Well, April, I don't think we had any issues in supply chain. Because we were pretty well stocked and there were some challenges, but we were very well covered, so we didn't face any challenges at all. And as far as supplies are concerned, I mean, at the end of April, the problems have started. Some states have got lockdown, so there are some issues. But as till end of April, it was not any major issue which we faced. The question is going to be the lockdowns which are going to come now, or what is going to come now. We are not very clear.
Sure. And Mr. Jaipuria, when you say supply chain, I'm sure manufacturing side would be far more under control. But let's say on the distribution side, anything specific you are seeing in any of the states like Maharashtra, for example, or Delhi at the moment?
No, at the moment, of course, demand. Supply has got a bit battered because of the lockdown. So we are only able to supply X amount of stores. Some stores are shut, like hotels, restaurants have shut down. So again, it's the same scenario what happened last year, but much better than last year, because last year was a complete lockdown. So, and also we learned a lot last year, so we've been able to manage it much better, and the effect on sales is there, but it is not as bad as what happened last year.
Sure. And the pockets or states where it is happening, is it fair to say that versus last year, the impact is rather more broad-based as against, let's say, rural, which did better after the lockdown was open?
So the rural is still doing much better. Rural is even today doing much better, even in the states or places where there is lockdown, because the rural lockdown is never as severe as what the lockdowns are in the main cities. So even this year we are finding that rural is performing much better for us. I mean, if we look at the first quarter, the rural was flying for us. It was going at 50% plus. So obviously with lockdown, the growth can't be anywhere close to that. But rural is still doing well for us. So we are not finding that kind of challenges. As long as we are able to make the goods reach there, they are still performing.
Got it. Sure. The second one is on, can you just talk about the input price environment, particularly on the sugar as well as PET, I know there is a question mark on demand itself, but from a gross margin perspective, how are you seeing the next few quarters?
Well, sugar, I think, is very close to what it was last year. There is maybe a couple of points. It has gone up, but I think it keeps going up a couple of points and keeps coming down. So sugar is not a major issue. What has really gone up in the last couple of months is the price of raisin. But fortunately for us, we are covered for the year. So we had bought raisin, and that's why our inventories are slightly higher. If we took that, we saw that coming as the oil prices were going up, China restrictions were happening. So we had covered ourselves, and we are covered practically for the whole season till maybe September, October. So we don't see any challenge for us this year.
Got it. And last small bookkeeping question. The tax rate in this quarter is 30%. On a full year basis, shouldn't it be closer to about 25-26%?
Vivek, this is some provision made which was earlier in contingent liability on the safer side. It's only the effect of provisioning.
Okay. So on a full year basis, Mr. Gandhi, should we still be running at about 25, 26?
25, 26. That's right.
Got it. Thank you and wish you all the best.
Thank you.
Thank you. The next question is from the line of Anand Shah from Axis Capital. Please go ahead.
Yeah, hi everyone. Congrats on a good set of numbers. Hi. Just couple of questions here. Firstly, on the quarter gone by, Jan to March, that you delivered. Obviously the volume growth even on a 2-year CAGR organic is also quite strong, double digit. So just want to get some color, what is driving this, because it seems you're clearly outperforming most of the other categories in staples. So is it again in terms of in-home consumption and the HoReCa revived or out of home revived to that extent, which is driving this extra, or in-home consumption is also showing similar growth? Any color you can give, a little bit granular, that.
I'll do a couple of things which have done extremely well for us, apart from the regular business growing. One, our energy drink, which was launched a couple of years back, we rationalized the pricing last year, and that is actually growing at a few 100% actually. So that is great. Actually, my son is sitting and he's saying we are actually growing at more than 1,000%. So that is what is one which is really pushing the volumes higher. Secondly, and it has been accepted by most of the states and every outlet, and that is really flying out of the shelves. Secondly, we launched a new variant which is to compete with the lemon drink of our competition with Limca, which is a Mountain Dew Ice, which is a lemony drink, a cloudy lemony drink, but has juice instead of just chemicals and carbonated only. So that has done extremely well since we have launched it, and we launched it this year only. So that these two things combined over and above, our Tropicana juices have done extremely well, which we had said we have started in a PET format which was not available in the country. Slowly it took time for the market to accept it, and now it has been very well accepted. So apart from our regular go-to-market improvements and other things, these three specific categories, three products have really enhanced our overall growth.
Okay. No, this is great. So essentially, product portfolio expansion on the new launches side is leading this extra growth. Anything on distribution also, especially in Southwest? You were looking to ramp it up post the acquisition, and obviously
our go-to-market has been improved, and we are keeping on improving every day. So that will keep on enhancing our volume and are going to the number of outlets every day. But that is a slow process, and it will keep on happening. These are a couple of things which helped us over and above what our growth would have come. So that's where we are seeing the growth coming much faster.
Got it. Perfect.
And of course, here our investments in Visi-Coolers, our chilling equipment was much higher. So I think overall everything put together has helped, and we focused a lot on the rural market, which has also helped and started giving.
Got it. And secondly, this April, May essentially would be contributing how much of your volumes overall for the year? It would be 1/3 or more?
Second quarter.
Yeah. About 27-28%, Gandhi?
Yes. 37 is the second quarter, so these 2 months maybe like 68%.
Africa is weak in this time, so about 27-28 could be 1% up or down.
Sure. And has this at all changed the mix post your Southwest acquisition? Because I would assume they are less seasonal, so has it at all changed, or just a minor change?
It's changed because North is still our strong SPL, so it will change slowly. It will start making maybe 0.5%, 1% difference, and over the next few years it will show a big change.
Right. Got it. Perfect. And just one last bookkeeping question, if you can share the debt number, is it possible? I mean, to get for this quarter, I mean, how much has come down? Because we've seen incremental Q1Q also.
From last March quarter to this March, we have reduced it by 600 crores, even though we had a tough year last year, but we were still able to reduce our debt by more than 600 crores.
Yeah, I know that is commendable. So great. Thanks a lot for the answers. Thank you.
Thank you.
Thank you. The next question is from the line of Percy Pantaki from IIFL. Please go ahead.
Hi team, congrats on a good set of numbers. My first question is basically on the acquired territories from Pepsi in South and West. I understand after acquisition there was a pandemic and that really disrupted initiatives that we wanted to take, wanted to put in place. But if you could give some idea of what improvements you have put in place and how that has helped you, or at least on a relative basis versus the industry growth. Has your growth been faster? And if you could also share whatever data points on this in terms of increase in visi-coolers or increase in distribution points or any other metric that you deem fit will explain what you have done in South and West.
Well, I think you already see the difference which is showing in the numbers in the first quarter of March, January to March, and the improvement is constantly going on. Our biggest improvement, what we needed to do was increase the number of outlets in South and West, which we were not servicing, unfortunately, during PepsiCo's time. And that has been done by adding more people, by adding more vehicles, and by adding more visi-coolers. So all three have been done and which have started showing results in the first quarter and hopefully will still show decent results in the second quarter. Second quarter again being pandemic being hit again in the second row. We can't be very sure what is going to happen, but it is still looks like it's going to be much better than last year.
So, would you be able to give any flavor on how much different the growth in South and West is versus your other organic geographies? I'm not looking for an exact number, but any kind of input you can give on that will be helpful.
No, but I think overall, we were much stronger in North as it is. So our North was always growing faster. Now I think the South and East has joined and growing at reasonably the same pace. Although we were hoping North and South and West would grow faster. But I think, unfortunately, we've really not had one proper year to really do justice to that territory. And we were hoping it would be this year. But again, there is disturbances. So it's very difficult to really say now West has been locked down for the last 1 month already. So it's very difficult to really assess the growth and what is the real business when things are so up and down. So I think it is clearly showing improvement and our go-to-market has drastically improved and that is what has shown the overall results because otherwise we would have never had this kind of growth overall. But to pinpoint exactly is being difficult right now. Our staff, some of it is there, some is not there. So we are a little bit struggling right now.
Sure. My next question is on CAPEX. If you could give some guidance on how much CAPEX you would be doing for CY21 and also for CY22. And also within this, is there any international CAPEX component or it's going to be mainly India?
Well, we are going to try and stick to what we have set up, not more than our depreciation in between because some capex we will have to add for certain production capabilities in certain territories, but we are not going for any major expansion which will be higher than our what we have suggested to you, which is the depreciation part.
Okay, so this formula of capex less than depreciation applies for CY22 as well, not just 21, right?
Minor changes could happen depending on product mix. Like our juice is doing extremely well, so we might have to expand a little bit on juice because the Tropicana juice is doing extremely well. So those couple of changes might happen, but within very close to the framework of about the depreciation and not trying to go beyond that between the 2 years.
Okay. And lastly, sir, just one suggestion. It's not a question, but a suggestion if you could implement. Now you're almost synonymous with Pepsi Beverages India. There are only a couple of small geographies which you don't cover. And therefore, apart from tracking your growth, it becomes very important for us to understand how the industry is growing and how your market share within that is moving. So going ahead next quarter onwards, if you can share any industry growth data or market share data, that would really be helpful to the analyst and investor community.
Okay. We will talk to Pepsi and try and get whatever is available and try and share with you.
Thank you, sir. That's all from me. Thanks and all the best.
Thank you. The next question is from the line of Prashant Kuti from Sundaram Mutual Fund. Please go ahead.
Thank you for the opportunity. A couple of questions. Firstly, on the South and West side, sorry for extending this a bit. You did highlight about that it probably is not got a full year. But just want to understand from where we kind of acquired, let's say if you're talking about close to 140 million cases where we were or around there roundabouts, what would that number look like as of now if one is to analyze that number? If you could probably help us in giving us that. We understand you said that you've not got a full year of operation.
The best is, how do you analyze that full number? Because, the first full year we got was last year. And the last year, was not really the correct year for us to look at it. And again, as we have started in the right format, now again there are lockdowns coming. So how do you really analyze it? So whatever growth we were expecting, the same growth are not going to come. That is very clear because of lockdowns. To expect that business would be 100% normal is not going to be there. Although we feel the effect would be much lower to us, I think we have been able to get away with it for at least the first 4 months. And coming forward also, since we've got the experience now, we know how to manage lockdowns and manage what the issues were last year. And the lockdowns are weaker than last year. It's not 100% lockdown. I think we will do much better. But to exactly put the numbers, because I don't know what the government policy is going to be in the next couple of weeks.
Sure. Just want to understand, like you said, obviously North has been our territory and we continue to do well over there. But more at an industry level, this would be a fair assumption to make that otherwise also South and West would have been weaker in general also. That's a fair assumption, or that the industry itself would have been weak?
The whole country was growing. The industry was growing. I can't really tell you that we grown faster, but I think the overall industry has done well.
Sure.
To supplement what Chairman said, of course, the mix of South and West is lower than the East and the North, because when we acquired that territory, that constituted 50% equivalent to our North and East share. Definitely, the mix in the countries, South and West, the mix is lower.
Sure. So you spoke about the, apart from your regular GTM initiative, you said that 3 products kind of helped a lot of growth. Any number to put up, sir, and typically how much would they have incrementally added to our growth? Maybe either from this quarter's perspective or from a full year.
What I'm saying, at peak season when the real growth starts coming is again got disturbed, so very difficult to say that what it would have added. I think you have to allow us to have one reasonable season for us to really give you what it has happened. But we definitely see the numbers improving. We have the numbers that our go-to market, the number of outlets we are visiting is much larger. Now again, what happens is the number of outlets, some of them are shut down because of the COVID situation. So it's very difficult to analyze the whole thing. As soon as it opens up, yes, maybe in the next quarter or so, I'll be able to answer it very clearly.
Sure. I was just asking, sir, what was the contribution of, let's say, these three products to our growth? That's what I was just trying to check.
Oh, these otherwise we can tell them offline. I don't know if I have it handy to me.
Okay, sure.
Whatever I have, I can give you, Prashant. In the first quarter itself, there is a tremendous growth. Of course, not as much as in non, but towards that. And as we are saying, India.
What the three products I said, Tropicana, Mountain Dew Ice, and Sting.
Yeah, Sting.
Might not have it exactly.
Yeah, Sting last year we had grown about 2.5x over 19, and that volume we have already covered more than that. In fact, in the first quarter of the current year.
So
is it good?
If you see, Prashant, we grew 250% last year, even during COVID times, over 19 in Sting, and that 250% growth we've already covered in the first quarter. So the numbers for the full year have been covered in the first quarter.
Sure. I understood. I got it, sir. Sure. Just one last question, if I may, actually, sir. It's actually a very commendable effort that, given that there's been so many lockdowns and given that until last year, we were always, generally carbonated is considered to be a very impulsive and out-of-home consumption product. But I presume that there will still be a proportion of out-of-home consumption is still there. I think last year, if I vaguely remember, you told a number of some 40% was out-of-home consumption. That number has now come down to something like a 20 or something is what I read around in one of your con calls. Just trying to understand that even after that not being there, we have still kind of achieved much better than expected organic growth rates. So can we actually say that once that also kind of comes through, the organic growth rate itself would increase versus whatever we were expecting earlier? Is that the way to look at it?
That is clearly showing in the first quarter. No, I don't have to say it. Once the things were normal, like it was not 100% normal, still you've seen a growth which is unprecedented.
Mm-hmm.
The first quarter has grown at 34%.
Sure.
So that has only happened because the demand is there. It's just that our additional go-to-market, our additional putting mini coolers and, the number of trucks we've added, the routes we have added, that is all starting to show. Clearly it is showing it can't be just a normal organic growth of 33-34%.
Sure. Absolutely sure. Thank you so much and all the very best to you.
Thanks.
Thank you. The next question is from the line of Devanshu Bansal, Emkay Global Financial Services. Please go ahead.
Hi, thanks for the opportunity and congrats on a good quarter. Sir, I wanted to understand on the growth capex front, how do we see the growth capex in terms of placement of VC coolers in CY21? And question is to basically understand whether CY22 can be a year as if COVID actually did not happen, or there is going to be some impact that we are going to see of due to 2 weak years in between.
So 22, of course, we don't know. What is going to happen. But 21, as far as Visi coolers are concerned, most of the Visi coolers have already been placed because the season has already started. So our placement of Visi coolers for this year has already been done. And I'm not very clear on what if you want in the second question. It's not very clear to me.
So basically, I wanted to understand, as in, if COVID had not happened, so basically in CY20 and 21 we would have placed a certain number of VC coolers. So still, with COVID, do we plan to place the similar number of VC coolers in the market, or it would be slightly lower?
It is placed before the season starts, so we have placed the VC coolers for this year. What we have to place.
Okay. And second question is on standalone other expenses front. So these are up about 50% in Q1. So what is the reason for this? Is there any one-off here?
I don't know what was. Gandhi, can you answer it, please?
Yes. Here there are two parts. One, as the volume has gone up, the expenses, most of them are variable in nature. They have gone up. If the volume is up by 34%, naturally the expenses have to be up by that. Apart from that, because we had a good profitability, we had reviewed all our assets base. There had been certain molds which were not to be put in use because the size of the designs had changed. So we have taken a return of that. And the third thing is we had one glass line at Bajpur, and the mix of glass with COVID is coming down, and we were thinking that it may not be put to use for a little longer period. So we have taken a write-off of that also. These two things together, 16 crore, and then pro rata the expense growth because of the volume growth will make good, the other expenses comparable to the any other year.
Okay, and one last one from my side. In terms of international profitability, there has been a healthy improvement, largely led by our Zimbabwe operations. So are these margin levels sustainable going ahead in this year as well? And secondly, you also talked about some reversal of currency-related provisions in earlier calls. When can we start seeing these reversals?
I think the profitability of the international operations should keep on surprising you now on the very positive side every time, and hopefully the quarter which is going on, maybe we may start, every quarter on quarter reversal of 127 crore reserve for the currency for Zimbabwe.
And this would be over how many quarters, sir? Any idea on that?
How the currency behaves. So, I can only say my foreign currency exposure is reducing, and to a great extent, the Reserve Bank of Zimbabwe has honored the commitment, and we every time a quarter as my foreign currency exposure will get reduced, pro rata we will be taking this provision to the P&L.
Okay. Thanks, sir. Thanks. That's it from my side. Helpful.
Thank you. Thank you.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. So just wanted to inquire about your margins. Basically, earlier we were of the view that the CY21 should be a year where we should be seeing a normal kind of margins, like 20% that we have been doing. So is there any impact of raw material prices or the second wave? So has this view changed in somewhat way because of these reasons recently? So any kind of comment on those would be helpful.
Thank you. Actually, your line was not very clear.
Too fast and too loud. Can you go a little slower, please? We don't hear anything.
Hello, am I audible?
Actually, your
Mr. Poddar, if you can take your speaker a little far from your...
Yeah, it's audible now?
Yes, sir.
Okay. So, sir, just wanted to understand more on the margin front because earlier we were of the view the CY21 is a year where we should be seeing the normal kind of margins. So is there any kind of change in view on that front because of the second wave or the reason prices that we have been talking about or the sugar availability? So any comments on those kind would be helpful. Yeah, thank you.
As I said earlier also, that we have covered reason for the year, so we don't see any challenges for ourselves. Mm-hmm. And I think sugar prices are reasonably under control, so I don't see any challenges in our margin structure. So we'll have a decent margin and what you had actually.
Okay, so this 21% kind of is the normal margins that we have been doing is what one should look forward to, right?
Well, that's what our margins have been, and I don't see any major challenge. But exact margin, nobody can say. It would depend on the volume also. So.
Yeah, understood. That's it from us. Thank you very much.
Thank you. The next question is from the line of Sirish Pardesi from Centrum Capital. Please go ahead.
Hi. Good evening, Mr. Jaipuri and Mr. Gandhi. Thanks for the opportunity and hearty congratulations for volume growth. I have two questions. If you take out the West and South acquired territory, in the core markets, your East and North, what is the growth? And the follow-up on that, if you compare the number with Pepsi coverage for West and South, what is the growth which you have achieved YOY?
North and East, the growth is maybe 4% higher than the mean of 34, and that much is lower in South and West, because there we need a little more time, as Chairman said, to make the corrections which we wanted to. In spite of COVID, we have
still faster for us than South and West. And so we see a lot of headroom available for us for South and West. As we keep on making the corrections, we will see huge growth coming out of there.
That's right. Okay. That's correct.
Yeah. Okay. Just when I look at and when we spoke to channel partners, I think northern market is more of a juices market. So would you be able to help me understand this Tropicana growth, which falls under juices, the growth is fast. I mean, only Tropicana I'm talking about versus carbonated. Is the shift in consumer behavior happening from juices to carbonated drink or carbonated to juices?
I think it's still too small. I think Tropicana itself is doing well, but doing well still in an overall category is still very small. So I think till it expands, it can't really change the complete scenario, because if Tropicana is not more than 3-4% of our volumes. So I think it's still a long way off, but the growth in juices is coming.
Yeah, let me come and answer that. This is Varun Beverages. Essentially, we've taken over the Tropicana business recently, and I think Mr. Jaipuri was sharing earlier that we've actually got into PET. This is only being done in Tetra by Real. Real is the market leader. Now, since we've taken over, we're expanding the distribution of this very rapidly, and our distribution is much more than any other company, especially Real. So Real, you will find more in major metros and tier 2, tier 3 cities, but in the smaller villages and all the other places, due to our strength of the Real distribution, we're able to take this product everywhere, especially during the PET as well. So due to that expansion and the organic core markets also, we're able to distribute this product much highly in the growth of the country.
Got that, Varun. Thank you. Just one follow-up. While we speak to many channel partners, and I think what is the crux during this Jan, Feb, March period, I think consumer has clearly upgraded from 500 ml to upwards, say maybe a liter or 2 liter. So would you be able to share what kind of contribution upwards of 500 ml the company enjoys at this time in the PET bottle?
I think the main difference, I don't think we'll have the exact numbers handy, but you can offline get whatever you need. But the biggest difference what has happened is the in-home consumption. Because of lockdown last year, a lot of people have started consuming these products much more at home than they used to. And I think that is continuing. And that is what is partly showing in the growth, which has gone faster, is when the on-the-go market also started, the in-home consumption did not stop. So apart from the in-home consumption, which had increased last year, the on-the-go consumption also started, and combined both of them have made the market grow much faster. And that is why you see such huge growth of 32-34%.
Thank you, Mr. Jaipuri, and thank you, Mr. Gandhi, and thank you, Varun. All the best.
Thank you.
Thank you. Thank you. The next question is from the line of Suvarna Joshi from Axis Securities. Please go ahead.
Thank you for the opportunity and congratulations on a good set of numbers. So I had just one question. Most of my questions have been answered. So you talked about rural market growing better or ahead of the urban market. But we have been, reading in newspapers that some gram panchayats have kind of, put a ban on sale of soft drinks and ice creams for the fear that it may spread the COVID for known or unknown reasons. So, do you think that this can challenge the rural growth if it becomes more stringent? That is part one. And part two to the question is, what would be the rural versus urban contribution? That's it from my end.
See, I don't think that is more news. It's not really happened in any of the towns we really or the villages we really are serving. I mean, we've not heard that seriously. So I don't think we should take that too much. Maybe a couple of guys in some village have taken it and somebody has picked up in the media. So it's still not happened. So let's hope to that and it stays like that. So I don't want to comment more on that. But it's not a serious concern for us at the moment. And rural is still growing much faster than the urban.
Well, thank you for that. Would you be able to share the contribution of rural versus urban in terms of our volumes or revenues?
I don't think I have it handy. So the exact numbers, I don't have it handy. I would suggest if you can go on offline and just ask for it, we'll be able to provide you. I don't have it really, and I don't want to.
Sure, we'll take it offline. Thank you so much, sir. Thank you. Wish you all the best.
Thank you.
Thank you. The next question is from the line of Sivakumar K from Unifi Capital. Please go ahead.
Yeah, thank you for the opportunity. Sir, one question with regards to the new territories of South and West. Are you done with the market level interventions which you had in mind in terms of establishing new VC coolers or increasing the penetration?
Well, we keep trying, and before we start, something or the other keeps coming. So the same thing happened last year. Before we could really do justice to the market, I mean, the complete lockdown came. And this year, of course, some of that we were able to do so, which is what is showing the results. But again, 100% unless until you go through at least one full year of normal year, very difficult to say that have you been able to do complete justice or not. So we really are happy that we are seeing results in the positive side. But I think still there is a lot more to be done. And in the disrupted, unfortunately, you can only push people to a point, and and especially today's market with home staff is falling sometimes, or your distributors are falling sick. There is a limit to what you can push the market. You have to let the natural thing go by. And I think fundamentally we are on the positive side. Things are improving, but if you really ask me, have we done everything we would have liked to do? No. And I think it would take a year or 2 years more minimum for us to really start feeling that we have done what we wanted to do.
Got it, sir. Sir, and from your own sense of the markets now, you have seen them for almost more than a year. Are these markets similar to do they hold the same growth potential as what the North and East markets hold, or these are more mature markets?
Well, they're slightly more mature than North and East because, one, the population is much higher in North and East. Second, I think the weather is much more different there. So it's a year-round business there. So, and the penetration was there. Whereas in the North, especially and East, because of power situation, there was very low penetration in the rural market. And the per caps in East was especially so low. So I think the same growth might not come in North and South, which can come in North and East, in South and West, against North and East. But at the same time, for us, the growth will come because our share is very low there. and because we were not going to the number of outlets we should go to. So as we penetrate and keep going to the right number of outlets, I think our growth will be also high for the next couple of years, and then they will start stabilizing.
Right. Thank you, sir. That's it from my side.
Does that answer the question or anything I missed out?
That's helpful, sir. Thank you.
Thank you. The next question is from the line of Nihal Jam from Edelweiss. Please go ahead.
Yes, thank you so much. So two questions from my side. You obviously alluded to the growth of Sting, which I would assume is more of an urban product portfolio. Specifically for your rural market, which has grown at 50%, are there any specific brands which have driven this growth, if you could highlight that specifically?
Well, I think Sting has grown everywhere, so it's not a urban market drink. I think you're seeing more truck drivers and the youngsters all over the place having it. So it's not really a urban drink. It's been taken as a regular drink all across. Anybody who wants to get a kick wants to have it, and who could not afford Red Bull at one is now having a kick Sting. And I think it's just expanding in a way which is out of proportion. So it's just that we see huge potential, and this will become an important part of our portfolio.
That's helpful. Would it be that you mentioned about launching the Tropicana PET bottles also similar to your competitor? Is that also one of the key reasons for rural doing better?
But the only issue with Tropicana PET is our facilities right now is only one or two, which we are expanding. As we keep expanding, that will also grow at a huge pace, because we were practically running out of capacity in the one plant in the peak season this year.
That's helpful. So just one last question. In the recently acquired South and West territory, you mentioned about reaching majority of the outlet. Just as a sense, currently at present, what proportion of the outlets you think we are reaching? And obviously the related question would be that how much more can we increase our footprint by in that acquired geography?
I think we are not even 50-60% there. We have a long way to go, my friend. So I think it will take us a long time to reach there, but we hope in the next 2 years to 3 years we will be there. It's a long drawn battle. It requires a lot of investment, a lot of manpower, really coolers, so which we are putting at a reasonably fast pace, and we are improving our reach quite rapidly, but it will still take us at least, I would say, 2 more years.
That is very helpful, Mr. Jaipuria. I wish you all the best. Thank you so much.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question, may press star and 1 at this time. The next question is from the line of Sumant Kumar from Motilal Oswal Financial Services. Please go ahead.
Yeah, hi. So you talked about the rural is growing at is growing. So can you talk about the semi-urban and urban growth and the demand scenario over 15 to 20 days?
When you say 15 to 20 days, which are you talking? The next 14 days, 15 days?
No, I'm talking about, say, last week of April and first coming this week.
It would depend on which city was locked down and which was not. So wherever there is no lockdown, the business was happening fine. Wherever, like the city like Bombay or Rajasthan, Jaipur and big cities, Delhi, there is the business has suffered. So it would depend on the city to city. And as the lockdowns are more prevalent in the urban towns, it further takes a hit. Okay, that is what is creating a issue. Not really the market is. I think the soft drink market is ready to take a big leap and jump, which is what has happened in the first quarter. But in-home consumption is happening. That's why you don't see the sales dropping so much, even though when there is lockdowns.
also in semi-urban market because there is a partial lockdown, so there is no much impact.
Pardon me?
So talking about semi-urban market, there is a partial lockdown. So is there any demand impact?
There is impact, but it is not as severe as the major towns. And rural somehow, even though there are lockdowns in some places, it's not so effective because rural, I don't think people really lock themselves down. So somehow the rural market is still open and it's still buzzing.
And how is the ramping of the Pathankot facility?
So Pathankot, as I said, Tropicana is pretty well. We are up to our full capacity utilization. So we could actually do better maybe if we had more facilities, which we have to seriously look at now.
Thank you so much.
Thank you.
Thank you. The next question is a follow-up from the line of Devan Bansal from NK Global Financial Services. Please go ahead.
Thanks for the opportunity again. Sir, just wanted to pick your thoughts on the product pricing front. As recently we took a price cut in December-Jan period on select SKUs, and I recently happened to see some MobiKwik cashback also on our larger packs. So what is the strategy and how long do we plan to keep this pricing differential vis-a-vis the competitor?
There is no price differential between the competitors. The competition is, and we are practically at the same price, unless until they have some specific agenda or we have some specific agenda. So there is nothing as being differential to the competition.
So just to highlight again on select 1.25 and 600 ml, I think we did some promotional packs at least in Mumbai.
That's a initiative we took last year, and it has really worked for us. So now it is up to the competition to decide what they want to do. So we are not. I mean, it's not the question of. We believe that that's the right price point for that category, and it has done extremely well, and especially when you've got in-home consumption and people don't have so much money, the right pack for a family to be able to drink and enjoy the product, and that has shown us huge success. So we don't want to change it.
Sure, that's helpful. Yeah, thanks.
Thank you. The next question is a follow-up from the line of Suvarna Joshi from Axis Securities. Please go ahead.
So thanks for the opportunity again. Just wanted to understand in the in-home consumption space, would the growth rates have been similar to what we clocked in Q4 of CY20, or they would have shown more improvement because of the season that we have been in?
No, of course, seasonality makes a difference. I mean, once summer comes, the consumption totally changes. But overall, as a percentage, if we look at the in-home consumption has gone up drastically because a lot of people, one, they are staying home, not going out as frequently as they used to, even when the markets were open. And they have got used to, because they have got used to staying home, they have got used to drinking at home also.
I think I just wanted to add is that, the 1.25 liter, what we've done is we've priced it at 50 rupees, and we were the first one to do this in the industry. And since larger gatherings are not happening, that means people are not in major cities at least are going to 2 liter, they're going to 1.25. And looking at the price point as well, what they're able to offer, that's really been on fire for us. So that's been one of the, a lead back in terms of getting the in-home consumption growth as well.
Sure. That was very helpful. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Thank you. I hope we have been able to answer all your questions satisfactorily. Should you need any further clarification or would like to know more about the company, please feel free to contact our investor relations team. Thank you once again for your interest and support and for taking the time to join us on this call. Look forward to interacting with you soon. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of Varun Beverages Limited, That concludes this conference. We thank you all for joining us, and you may now disconnect your lines.